right, part 3. This is exciting. I've had so much fun talking with Kyle Fuller about the infinite banking concept, Becoming Your Own Banker by R. Nelson Nash. So in the previous parts, we talked about the human behavior. We've talked about what it takes to get this thing done. So the question is, where do we go from here? How do we start? Kyle, you've had a lot of client interactions. You've had a lot of clients ask you this. What's next, right? What do you tell them? What's your advice to people? Say, okay, I heard what you said in the previous podcast, but what's next? Where do I go from here?
Yeah, depending on how much education they've had prior, kind of dictates that conversation for me. So I always encourage everyone start affordable so it's comfortable. And what I mean by that is you need to have a saving strategy built. So if I don't see a legitimate reason that you could save 10% of your income a year, I'm probably recommending you don't start this now. Maybe take 6 months and get that set up before you start this. But some people come after like 3 years of investigation. They've read tons of books, they've watched podcasts, video, and so now they've had enough of it and they're ready to go. That person, I'm more willing to start maybe a little bit more aggressively, depending on what their needs and what their goals are. But I would always recommend starting affordable so it's comfortable. You really learn when you have the asset, do you not, Wade?
100%.
And I always tell people, give me 3 to 5 years going through our educational. We have a lot of courses. We do deep dive classes every month. We do live wealth seminars. Give me 3 to 5 years if you'll just show up and you'll know this as good as I know it. And from there, you will expand the system. So, 9 years ago, we started with 1 policy. Today, we've got around 30. Like, we've grown the system as we've grown, right? And so start affordable so it's comfortable so you can learn. Unless you've had a lot of education, you're so bought in that you're ready to cannonball in like I did.
Right.
Now, cannonballing in like I did was 10% of my income, by the way, which was $8,000 at that time. So we started big.
Yeah. So even with, somebody said, okay, that's the policy I'm going to start saving. It doesn't have to, the process of infinite banking, I want to be real clear with people. The process of controlling a banking function in your life doesn't have to be through a policy. It should be.
That would be smart, but you could do this with a savings account. You could technically do it with a 401k.
Yeah, because Nelson talks about that in his book. But what's the key difference between the person that doesn't have a properly structured policy and somebody who does? And I'll say, are they thinking long-term or are they thinking short-term? I've had some clients like, well, I can do this and can I use this? I'm like, you can absolutely use all those vehicles. One thing you have to have is, certainty, right? So you go in past anything besides a CD, a money market account, or cash, then you really can't compare the products. And Nelson talks about, this in his book. But the point we really want to get across about what he's talking about in his book is like, are you thinking long-term? Because that's his number one thing, think long-term. And if we're not thinking long-term, and if you're not willing to say, I want to make this be the rest of my life, then you might be best served by doing it in a checking account or, CD or whatever it might be.
Yeah.
Because again, you're not getting out of the banking system. Now you're still participating in that banking system. You put your money in the bank to hold it there in a CD, and then you'll borrow against it, or you'll use it and then pay it back. Hey, that's all great, but who's always waiting in that transaction?
Someone still owns the banking function in your life,
right,
and you're still renting it.
You're renting it. And that's the big key. You're renting it versus owning it. Now you buy in and say, okay, I'm going to buy a properly structured policy from these guys that talk IBC all day long. Now, who owns that banking function? You and I do, because we're all part of this mutual insurance company. And so therefore it's ours.
Yeah.
And now we have that asset, and now we can borrow against, and all the good things and all the stuff we talked about up to now, we can be using. So this is the difference between renting and owning, thinking long-term versus thinking short-term. So that's really what he starts, in part 3 of the book, he starts talking about building your own banking system. That's really what he's getting at. It's like, are you able to think long-term? And I like the way you put it. Are you renting versus owning?
And, there's a lot of illustrations past this point in the book, Wade, and definitely go through those. If you want, I would say, more up-to-date numbers with a lot more examples, just hop on our website, factumfinancial.com, go through our IBC courses. We've got them specialized. If you're a business owner or an investor, you're just using this, in your normal everyday lives. We got lots of examples there. But there are a couple rules that Nelson goes over on page 44. He says, don't be afraid to capitalize the system. I'm gonna say go ahead and start affordable so it's comfortable. Now, the people that have had a lot of education, they know they usually go capitalize it pretty strongly, put a lot of money into it right away. And he says the more capital you put into it, or the more money you put into it, the more you get back tax-free at passive income time. So some folks refer to this as retirement income. So think about that. The more you put in now, the more you can use later. There's never this is total and, right? There's no either or. It's
Right.
You put in more now and you have more now and later. That's how it goes. The true compounding curve. He also says, don't make policy loans without making provisions for paying them back. Going back to part 1, don't steal the peas. So very simple system to process. Fund your banking system as much as you possibly can year over year. And when you have an opportunity that you can jump on, do not make a policy loan against your cash values unless you have plans to refill that policy,
Right.
with additional interest. You do those two things, you're going to have a rock and roll banking system.
You touch on a couple of things, right? That idea of not having a plan. Don't make a policy loan without having a plan. We talk a lot about intentional growth, and think about how intentional your growth is with your money. If you have a plan for every time you're going to use it, every time you're going to put it to work. Now, I'm going to take a step aside from maybe some of the people in the infinite banking world, but I'm not one that's saying, I'm going to use this to pay for my groceries. I'm using my policies, and I'm looking at how I can use my policies for opportunities to purchase, or opportunities to take advantage of opportunities for cash flow items. And then other people will say, well, I'm going to use this. The first thing I'm going to do is pay off my house. Well, I think it's important to have a hierarchy of where you want to start using it, and start saying which is the most detrimental to my wealth, right? 25% credit cards are detrimental to your health. Let's pay that off first. Let's have a hierarchy of what you're going to pay off. In my world, the house payment, or paying off the house, is probably one of the last things that are going to happen. It's going to happen, but I'm going to use it for other things. And again, my hierarchy doesn't necessarily have to be your hierarchy. It might be different than yours. I don't know what yours is.
It should be different.
It should be different, because it's where I'm at in my stage of life, and where I'm at, my understanding. All those things are play into it, but it should be different.
So a couple things you just said there too, Wade. Number one, be careful, because there are a lot of marketing companies out there. There's individuals who they haven't taken the time to seek out good mentors, go to truth concepts training, spend time with people like you, Wade, because you help critique a lot of the things that I used to say, and that was very helpful for me. And there's a lot of noise out there, even in the IBC world, with this stuff.
Much.
And once again, I'm always going to take the approach that I'm sure they're wonderful, good people. They just aren't as educated to know the truth in the way that we know it. And so we want to be careful that you're not watching videos where people are telling you you can buy jewelry and make money. You can buy your groceries and make money. The normal money game doesn't work that way. It doesn't work that way with banking either. The only way you make money is if you buy assets that produce income. That's the only way you get ahead. You cannot get ahead by buying liabilities. It doesn't work. Sometimes we manipulate content to make it look like it's happening, but it's not really happening. So you want to be careful. And then also, you touched on something which is one of our core values, which is, infinite thinking, one of our guiding principles here. And that is a long-term approach. It's an abundant way of thinking, but it's still in the word of thinking. We want our clients to think for themselves. So what you described, some people might be rushing to pay off their mortgage. That's not right or wrong. It needs to be their decision. I'm doing stuff with my system that's different than you right now. We're in different stages of life. We have different goals, everything. So this is why you have to work with a coach and a mentor, so they can help empower you to think for yourself, and you'll know exactly what to do once you have the education. Yeah. Your strategy should be different than anyone else's.
Yeah, it's so true. Because again, what I was saying is that where I'm at is like, I have things I want to do, and it comes from great coaching. It comes from great mentorship, just like you said. And having people challenge your thoughts, like, they don't disagree with you. I ask you a lot of times, I don't disagree with you, Kyle, but I'm just like, why are you saying that? Why is that important, right? How come you're saying that, or why are you going down that path? You need to have people around you that are asking you those tough questions. You made a comment that there's marketers that are putting things together that maybe aren't quite right. And part of the reason why they do that, and part of the reason why we hear it, is because we don't want to hear an uncomfortable message. We want an easy way out. Like, hey, look, all you have to do is buy, 14 candy bars and you're going to have way more money than you ever spent. It doesn't sound right.
Right.
But they do it because they want an easier way out. They don't want to have an uncomfortable message. And sometimes we have to deliver an uncomfortable message. And part of that is, be responsible with your money, save your dollars. When you put it to work, make sure you have a plan to put it back, and then rinse and repeat. There's not a shortcut. Nelson talks about that in page 1. Right? This is not a shortcut. This is not a get rich quick. It's a get rich long term.
Yeah. This is not a magical, mystical system. It takes discipline. You have to follow the rules. And if you'll do, the system will work remarkably well for you.
Yeah, exactly. So, I use the acronym, I just use TMD, right? It takes time, money, and discipline.
That's good.
To make this thing work. Everything works if you have the time to put into it, which really means forever. It takes money because, again, pennies in, pennies out, dollars in, dollars out conversation. And it takes the discipline to say, okay, I'm going to put it to work. I have to have a plan to pay it back. Early in the book, Nelson talks about the Midland Bank of Texas, where it failed because all of its board members had delinquent loans. Think about that from our situation.
Yeah.
We have to have the discipline to make sure we pay back those loans. We have a plan to pay it back. Because I hear people out there all the time, I don't plan to pay back principal or interest. Well, how do you think that's going to turn out? You're trying to create something out of nothing.
How long would a bank be in business if they loaned out money with no plans for it returning?
First National Bank in Midland, Texas. Go read up on it. Go research it. It's exactly what they did.
Yeah, that's not a good business practice to be in.
Yep.
So let's talk about part 3, Wade. In this book, it really covers the different ways people are financing vehicles.
Mm-hmm.
You can pay cash. You can have a different type of product, a CD in the book, as a banking tool, or you can use your whole life insurance policy. Now, we've got a very special video for this that'll walk you through this in really good detail on our course.
Where did we find that course again?
Factumfinancial.com. You'll see a video on there called IBC for Vehicles. And it'll walk you through a similar graphic that you're going to see in the book in part 3, where there's different ways that you can finance things. We're not going to go too in depth on here because there's a lot of numbers on this page, but you can go watch that video. I think it's 8 minutes long, and it'll show you the difference between someone that pays cash, someone that uses a typical checking account or a CD as a banking tool, which we'll go over, and then what happens when you just replace that savings environment with a whole life insurance policy and do the exact same thing using the flexible loan provision feature in the policy. And you'll see the difference that it makes doing the same things you're already doing right now.
So when you say the flexible loan provisions, you mean the guaranteed flexible loan provisions of a life insurance policy.
You're exactly right.
It's huge. It's a big word. It's a big word to add to the front of that. How many people have ever had a line of credit pulled? You're talking to one.
Yeah. Okay. That's right. Let's talk about that story.
So back in 2008, back when the economy in North Dakota was a very much a bull market. Oil was booming. Things were really good. My business and my income was great. So it had nothing to do with me. And so I had a gentleman over to my house. We were going to do an expansion. And so I said, we want to build, do an expansion on our house. He goes, yeah, we'll be here next Wednesday. We'll start digging footings next Wednesday. Talk about footings and a good foundation. I get a letter on Monday from Wells Fargo that my line of credit had been pulled. And that's how I'd planned to fund this project.
Yeah.
I'm like, what the hell did I do? So I picked up the phone. I called the company. And of course, it took 3 hours to get to a service rep that says, nope, we just pulled everybody's line of credit. What did that leave me? Who's in control? This is the point where I really got serious about IBC. I kind of understood it. I dabbled in it a little bit, but this is what drove home, like, I was not in control. And I had, I tell the story all the time, and I actually had one guy says, well, they don't pull lines of credit unless you have really bad, unless you're really doing something wrong with your credit or you can't manage credit. I'm like, no, I had a great credit rating. There was nothing wrong with the situation. It's just that they decided to pull a line of credit because the banks got scared, and they pulled everybody's line of credit. And this is what drove me to say, I got to find I knew a better way. I just had to get serious about it. And this is when I got serious about it.
I bet you started putting more money into your system at that time.
We started 3 new policies that year.
Yeah. You got to build up that banking system.
Got to capitalize.
That's right.
So, because I would have funded that construction project, but I was afraid to capitalize. This is going back to right at the beginning. I mean, I was even talking to Nelson Nash. I understood this, but I was afraid to capitalize because I didn't know what I didn't know. I wasn't educating myself. But once that happened, I'm like, I see it now. And so sometimes it takes those events in life to really change your eyes or open your eyes. And, we had a small policy. I could have funded part of it, but I wasn't able to fund it all. So we had to put it on hold until I could get enough money capitalized the next year to where then we decided to do the addition on our house. But again, here's just a great story. Who's in control of that? I didn't have a guaranteed line of credit. I did, but it just wasn't big enough.
Yeah. And, what does that do to you emotionally, Wade?
Oh, fear.
Yeah.
Fear runs rampant. It's like, what's coming next? I mean, now all of a sudden, your plans that you had made going forward were all of a sudden gone because somebody else said it shouldn't be there.
Yeah, I don't like that equation.
No.
And actually, a lot of the agents that work with us now have very similar stories around similar time frames too.
Yep. Exactly. So
this is a control conversation, really.
100%. It has more to do with control than it does interest rates or anything else. It's who's in control of that function.
And that's really what's at the core message of what it means to become your own banker. When you have that control in your life, it is a peaceful, quiet, profitable way to be living. Am I right?
Yeah. A lot more quiet, a lot less stress, a lot less angst. Because now you know that whatever kind of comes down the pipe, I got liquidity to handle it. You have money for either chaos or opportunities.
That's a good place to be in life.
Right. And sometimes
you can weather a storm and you can capitalize on opportunity.
Yeah. And if, a lot of times the chaos leads to great opportunities.
I would say it almost always does.
Always does. As long as you're not in the chaotic part of it.
When the masses are running around, screaming because the market's tanking or we're going into a recession, there's another pool of people just ready for what's going on sale.
Yep.
Something's going to shift, and when they do, they're going to jump on it.
I got clients right now. They're building capital. They're stockpiling cash for what they feel is coming. Now, are they right? I have no clue. But what if, this is a great opportunity to talk about this. They're stockpiling cash. They're putting a lot of money away. What if the inevitable, what if that crash doesn't come? Are they in a bad position? Absolutely not. Think about it. They put money in a great savings environment that's going to continue to grow. And so, they're like, well, we don't know what the future is going to bring. So we're going to put a lot of cash on the sidelines just to make it happen or be ready. And then if it doesn't happen, that's great. But we still are in a better position we were if we hadn't gone there. Versus somebody that says, I'm going to put a lot of money in just a cash account. Also now, those people, especially my real estate investors, they're like, man, I wasted a lot of opportunity because I'm not getting any dollars. I'm not getting a return on my money.
Yeah.
And I'm having to pay more taxes because I did earn a little bit of interest.
It's crazy how just changing your savings environment enhances so many pieces to your life.
Yeah. And Nelson talked about that saving, the environment is the key.
Yeah.
We want to have a better environment. Get that tailwind that Nelson talked about, right? Stop fighting the headwinds and just wait a little bit, have some patience and find that tailwind.
Yes. So let's jump over to this equipment financing chapter, Wade. There's also a lot of numbers here. And
a lot of stuff here.
Once again, go to our courses, factumfinancial.com, go to IBC courses, and you can see plenty of videos. And they're actually, all of them are personal examples of things I've done. So they're real life numbers, what we've done, how we've used it. And so it's we're big on authenticity. But on page 52, he says something that I just love. He said, everyone should be in two businesses, the one in which you make your living, and the other should be the banking business that finances whatever you do for a living. Of the two businesses, the banking is the most important. Businesses come and go, but banking is eternal.
Banking function is going to go on forever.
Whether you're 20, 40, 80, Wade, do you need access to cash?
Always.
It's never not there. So the earlier you get into this process of becoming your own banker, the better it's going to be for you now and in the future. There's never a time that we don't need to be saving money. We don't need to be owning the banking function in our life. The earlier you do it, a lot more profitable it becomes.
Yeah. It gives you that time element. I've had 7-year-olds saying, well, is it too late for me? No, you just don't have the time element. It's never too late to save money and then apply these principles to somebody that's 70, especially if you have, that next generation that you can teach the same thing to, right? You need to learn it yourself. You need to get into it and then start teaching that next generation so they can not be in the same position that you were in.
Absolutely.
I mean, think how valuable, how powerful that is if you can bring somebody else, out of that bondage of servitude to the banks as quickly as possible. How fulfilling is that going to be?
It's probably one of my favorite parts of implementing this process, Wade. You think about how much of a maverick and a pioneer Nelson was to do this by himself.
Right.
You talked about those early stages. It takes a certain individual to weather that storm alone when everyone thinks you're crazy. And now we're in that phase where there's thousands and thousands of people teaching this, and there's hundreds of thousands of people doing this, and it's starting to pick up like crazy because people are tired of the nonsense and the noise that exists out there.
No.
But to do that on your own, we're here on this podcast with lots of lives we've impacted because Nelson figured this out and wrote this book.
Yep.
What it's doing for the future Borths, the future Fullers, all of our clients that have started family banking systems, business banking systems, everything in between, that all started from one person. To me, it's one of the most enjoyable parts about this business is when you sit down with a family or business and their lights go on and they go, oh my gosh, this is what this will do. How do we not know about this? It's the most fulfilling thing ever. And we get paid to do that.
Yep. I've had more fun teaching this and mentoring people and getting clients to see how valuable this is. I mean, that has become the most fun thing I've done in a very, very long time. Just because as soon as they get it, you can just see the sparklers going off and the fireworks, and it's like, like you said, oh my gosh, why haven't I known about this? And well, yeah, I would agree. I wish everybody could learn this 20 years ago, but we can't. So let's start today.
Yeah.
So
I have a question for you, Wade.
Yeah.
We're in this chapter about, being in two businesses, the banking business and for business owners. Do business owners have the same problem that everyone else does that Nelson talked about in his book? You finance everything in life?
Absolutely. It's the same issue.
We all have it. So think about that. As a business owner, you're either going to pay up interest to finance your vehicles or whatever it is for your business, goes to someone else's bank, or you pay cash in your business and you give up the interest you could have earned. Either way, you're not controlling that flow of money in your favor.
Yep.
You as a business owner, have the same problem everyone else does as a consumer. Yep. You're just probably doing it on a larger scale, which means you should be doing this faster.
You just added more zeros to the equation.
Just added more zeros than the consumer. That's
right.
Really the only difference here.
And that's why the banks love you. So with the equipment financing, I have to say that this is probably the chapter that I love this chapter, but I find it a little frustrating because everybody takes it so literal. And so if I have one message to give, I said, get and understand the process and the concept Nelson was getting across here. Again, we have to realize this was written in 2000.
Yeah.
That's right now it's 23 years ago. So just understand the process is the most important thing. Understanding that, I have a note in here and he says, what are you doing to cut out the middleman? That's really what Nelson's talking about when he's talking about the equipment financing chapter. He's like, right now you've allowed a middleman into that equation. Why don't you become that middleman?
Yeah, that'd be a smart person to be.
Yeah, and he says it's all laid out, and he kind of gives the example of going and getting a lease document or a lease quote from somebody else and saying, well, if you're going to run that equipment, go let somebody else run that quote for you, and then you just implement the whole system. So I would say that the biggest takeaway in this chapter is understand what he was trying to say. Understand from a business standpoint that, like Kyle said, you're going to finance everything you do and you're going to add a lot of zeros, and the banks are going to love you for it because they're going to see those dollars either you're going to save up that you have in your savings that's just sitting there for that rainy day that may never come. And so they're making tons of money off of it. Why not put that into an environment that you own and control? And then when you need to finance something, then you just take what the middleman was doing and you apply it to yourself. Pretty simple.
It's that simple.
Are we done? Okay, let's go.
Let me ask you a couple questions on this though, Wade, because I think you're right. People do take this literally. They see $40,000 of premium deposits going in for 4 years and then it stops. Yeah. So I do get the question from time to time. So I have to fund it for 4 years, then I can stop. So let's touch on that. The reason, is that hypothetically possible? Yes. Would you want to do that?
No.
I want to say absolutely not. Now, the reason you don't want to do that Think about how this asset works, this whole life insurance policy. Contractual guarantees to get better or stay the same every year, Wade?
Get better every year, contractually guaranteed.
So if this asset gets better every single year, what I'm hearing people say when they say, how fast can I stop funding it? So this asset that gets better every year, you're asking me how fast can you slow that down? Let's rethink our thinking, right? You want to keep putting as much money into this thing for as long as possible, which is why you need to take a long-term approach to it. So there's one item there. Then if you look through his illustrations, I love it because it's like, here's what happens if a business owner finances one vehicle, one truck, two trucks, three trucks, four trucks. What happens to the numbers? They go up.
Because it's bigger, right?
So let's just take a step back. What's happening here is if you were a bank and you had one person come to you and they said, I need a loan for my vehicle. Cool. One. You're making some cash flow from that. Now 5 people came. Does the bank make more with 5 vehicle loans or 1?
5.
Exactly. It's that simple. So what you should take from this is fund it as aggressively for as long as possible and then finance as many things as you possibly can finance while maintaining a healthy dose of liquidity. We'll just say that. Don't leverage your system.
Have some rules around how much you're going to leverage.
We'll help you with all of that. There's educational resources on our website, factumfinancial.com. It's the third time we brought it up.
Well,
it's all there because everyone always asks the same questions. That's the reality.
Right.
The concept's very simple. You just need some basic education around it. So that's what your takeaways should be from this page.
Yeah. And the other part of that equation too, and I get the same thing. Well, why do when can I stop paying it? That's a very scarcity mindset. Because the question is, why would you want to stop? If it's so good and you understand this, and I do, why would we want to stop? It's like, the bank saying, our 5th customer came in today. Let's close the doors. We don't want any more customers. Or the depositor. We've had 10 depositors. We're done. It's all we can take.
I think you're right with the scarcity mindset, Wade. And I think that comes from just the notion of retirement in general. It's such I'm going to say a plague because I hate the word retirement. I don't think that's the real problem. Going back to like the behaviors here, the problem is not a product or a strategy. The problem is your behavior. That's where it has to start. And so when people are saying, when can I stop funding it? Are you planning on running out of money in your life? Like, why isn't the question, how do I buy assets that produce income that help me accelerate this in the future? Right. Who's not having that conversation with you? And if your financial advisors or your CPA, if their strategy for you is like, don't worry about taxes going up because we're going to have you in a lower tax bracket in the future, that is code for I have no idea how to help you make money. So my plan is for you to live on less in the future. Yep. Run for your life if that's who's on your team, right? But that's not the problem. The point, you're trying to retire from what? Why don't we fix how you're living now so you wake up and you never want to retire from the current life you're living? That's why we teach 5 areas of life.
Yeah, that's the abundance in all 5 areas.
When you get to that point, you'll never think about retirement. You'll just constantly think about how do we become wealthier to fund more family vacations, more premium into our policies, more charitable donations. That's the best way to live. You never want to retire from the perfect life. I'll just put it that way.
Right. Because it's abundance and it's making an impact, right? If you're living that perfect life, people that want to retire are just miserable at what they're doing. So they'll go out and find something that's not so miserable. That's fulfilling, not so miserable, but something that brings you value, right? So my intent, at least I know I've been put on this earth so I can bring value each and every day. So the day I stop bringing value, the day I quote unquote retire, is the day that the Lord's going to call me home.
Right.
And that day will come. There's 100% possibility that day is going to come.
Death is certain for all of us.
Right. And so what am I going to do up to that point? Let me find a way to bring value.
Yeah.
Now with that being said, I want to be able to say, what am I doing for my family and for my life, my lifestyle that I want to create passive income? Your policy itself can create passive income. That's what Nelson talks about here as well. It's tax-free passive income. Or what if we're using our policies to buy assets? Like in this example, he created a tremendous cash flow by leasing his truck to his nephew, his equipment to his nephew. And he did it time and time and time again. Well, there's just another great strategy, but there's multiple strategies of investing to create cash flow. But having access to cash is the start. And when we look at this illustration, people can say, well, he put in for 4 years and he quit. That's because he was just trying to drive a point home. That's one.
That's one.
Maybe that's one out of 100. So why not years 4, 5, and 6 is because people get lost in the numbers. That's exactly what happens with these illustrations. I know I had a conversation with Nelson, shortly before he passed away, and that was one of his regrets, is that he put illustrations in here because he says, I don't want people really to see the numbers. I want them to see the purpose and the cause in the process.
Yeah.
But it's there to help you visualize and understand. It's not there as like, this is the only way to do it.
This is just to give you a baseline example.
Yep.
Then you got to take your own imagination, your own unique situation, and apply it. And that's why you need a coach and a mentor.
Yep.
So I want to go over to page 65, Wade, on capitalizing your system and implementation, part 5.
Yep.
One of the things he says is this is going to require a change in priorities in life, and recognizing that controlling the banking function personally is the most important thing that can be done in your financial world. You got to own that environment that affects every other piece of your investing strategies, your business, your consumer life. He says, above all, you got to be patient. It's going to take years to get started, and it needs to be a lifetime commitment. I think of like the word investing, like some people invest, and then there's others who are investors. Investors, it's a lifestyle. They do not stop. They're just investors. Like that's what they do, right? You're becoming a banker. The banker, this is infinite. This is who you will be in the future. This is not an event, right? This is a lifestyle. And then it's funny, this is one of the first times I had this highlighted, I don't know how many years ago, but he says, organize or join one already in existence, a wealth club that meets periodically.
Yep.
We do these live wealth seminars at least twice a year. And community is so important to winning. It's one thing to implement this, do it on your own, but when you're in a room with a table full of people who are doing this too, and you connect with them, that relationship capital cannot be underestimated. When you have locked arms with people who are doing this as well, and they're on that same journey, that's where it gets really fun, and you'll really accelerate what you're doing if you can find those communities. And everyone's welcome to come to ours, because we do this not only for clients, but we teach agent masterminds too, how to be successful in this business. And we open those up to anyone. Come and see our stuff. I don't copy my courses. Yeah. It all came from what Nelson did anyways, one way or another, right? It's like I didn't create it. I just borrowed it from him. We put it into our own words. So borrow it from us and, utilize it yourself. We're here to serve, but people need connection. They need community. And so you've got to find a group, come to ours and just network with us. You'll meet the most amazing people, and it'll accelerate everything for you.
Yeah. Having an opportunity to go to a wealth summit that is around something that I believe passionately, or maybe as a listener, you believe passionately, or maybe you're listening, you're like, man, this is like so good, but I need to know more. Well, get educated, go have some conversations with some real life people and what they're doing. There's a lot of noise on the internet. I said there's a lot of TikTok noise out there because they're short, but sometimes you need to have long form conversations to understand what's going on. And there's a line in here, Nelson talks about capitalizing your system, and that means, you got to start putting money in, and that's the pathway. But he says, above all else, get started now. How many times do we hear a good idea and we go, we'll get that later? Well, obviously it wasn't a great idea, because if it was a great idea, you would have grabbed it.
You would have jumped on it immediately.
So if you think this is a good idea, if you think it's a great idea, above all else, get started now. The longer you wait, the more you have penalized yourself, because somebody else is growing and vacationing off those profits that you put in somebody else's bank.
Right. Even if you start small.
Yeah. Just get started.
That's it.
So
the rest you can work through. Let's talk a little bit about the cost of acquisition, Wade.
Cost of acquisition.
You always, we've had lots of conversations about this. I think it's a principle more people need to understand. What is sitting in this book? What's available on our website, on our courses? There's been so much cost of acquisition for Nelson to learn this on his own, put it in this book, for us to take it and adapt it to our lives, put it into a course, get to this point right now. Like, there's this cost of acquisition that, if you can understand that principle and then leverage it to your advantage, it's all we're really doing with this whole life insurance policy and this private banking system. We just watch what the banks did, tied into a system that already exists. And that cost of acquisition is now so low for us, where we don't have to go figure all of this stuff out on our own.
Right. Yeah. You think about it from like anybody's standpoint. How much time are you going to go through trying to figure all this stuff out yourself? What is the time that you're spending to do that? What's the dollar amount you put on that time? Or do you partner with somebody that has the educational material laid out, has the expertise, has the knowledge, has the experience, good and bad, about, I'll use my story about losing my line of credit. All those things I can share with you. Kyle, you have stories you can share. We have videos that you can watch. Right? All those things are condensed. So you're not spending days or years learning. You're maybe spending hours learning. And then you put dollars to those hours saved. What's that cost of acquisition? It becomes a lot cheaper versus you having to go do it on yourself. And quite frankly, who wants to do it by themselves? Nelson had to do it by himself, and he struggled. There's no doubt about it. I mean, he was questioned, ridiculed, all that stuff we talked about. So that's the first start. And then the second part is, when you start talking about cost of acquisition from financing, right? You think about, well, I'm going to go out and start a business. What does it cost you to acquire a business? The education, the time of the education, the capital taken to put up a building or buy the furniture, whatever it is. I've done it. You've done, how expensive that is. This business of financing, using a properly structured whole life, the insurance company's done the majority of the work for you. They have professional investors. They have staff. They have everything set up for you. So your cost of acquisition is really, really small. And you can see profitability in doing this in maybe even the first 1 or 2 years. Now you're going to look at your policy and go, well, that's not breaking even. Well, that's just part of it.
Yeah.
Right? Don't think short term. Don't think small. Think like, well, if I had access to those dollars, which you do, if you properly structure, you have access to a portion of those dollars, and I go out and buy a piece of real estate, or I buy something that's cash flowing. Can I be breaking even in years 3 or 4, 2, 3 or 4? I mean, he talks about the Japanese, their business plan is to lose money for the first 7 years.
They expect it.
They expect it. And if you do something shorter than that, they almost ridicule, because what was the shortcut you took?
Yeah. They're about the discipline, the habits, the long-term thinking.
So now if we want to talk about cost of acquisition, what we're talking about is we can shorten this time immensely for you. The insurance company has all the systems set up. We have the education, so we can really shorten this process, and you can be in controlling your banking function in a very short time.
Very short. And just a quick point of reference on that, the banks, with all the money they make, they still save with insurance companies. That cost of acquisition is so high, because think about it. You have to have the track record of success, 150 plus years. Who's going to commit to the discipline to build that infrastructure? That is long-term thinking. No one thinks longer term than these mutually owned insurance companies. Oh. The banks tie into that cost of acquisition with them too.
Right. Because it's low. I mean, they have a professionally managed bond portfolio that the banks don't have to hire.
Right.
They don't have to put 10 people on staff to have a bond portfolio that's safe and guaranteed.
So it's good enough for them. It's good enough for us.
Should be. I mean, don't recreate the wheel.
That's right.
So
Wade, let's wrap this 3-part series up with page 85, the points to consider. One of my favorites.
Oh,
right there at the top, Nelson says there's only 2 sources of income: people at work and money at work.
yeah.
What I love about my whole life system is every dollar that's in there is constantly working for me 24/7, completely guaranteed. It does take a break from 9 p.m. to 3 a.m. Right? No, it's a 24/7, right? And so having that working for me is and such a quiet asset, like creates no noise in my life. It's just there doing its thing, and it's waiting for me to put it to work in another opportunity.
Yeah, you make a great point there. I love your terminology. It's quiet. It's quiet growth. You don't have to manage this thing all the time. Not like your business, right? Your business it takes time and effort. It's noisy. This is the quietest growth you're ever going to see.
I'll say it's silent because the guarantees.
Yep.
There's no other asset that's like this.
Yep.
Number 2, if you knew at passive income time you'd be getting back everything that you paid into a system tax-free, would you object to putting more money into it?
That's a great question.
If you can go that far out in your mind, it would change the way you fund your policies now.
That's why imagination was like one of the very first segments in the book, right? Just imagine what that's going to look like if that would be the case. It is the case. Imagine how that would impact you.
What about number 3? When you get paid for work, you put all of that money into someone else's bank, and then you write checks from that account to go buy the things of life. So someone else's bank, Chase, Wells Fargo, gets all of your money. If you owned a banking system, wouldn't you want to run all of your business through your bank?
It's like if you own a grocery store, why would you go to Walmart?
This can't be done immediately. It'll take the average person about 20 years to reach this level. If this message is taught to succeeding generations, then a perpetual banking system can be achieved. I have the word written down, stewardship, right there.
Very
This
much so.
concept embraces and encourages stewardship and good, sound money habits for the next generation, which is one of the reasons why we love to teach what we teach.
That's why we start with, abundance in all 5 areas of our lives, because this is just helping fund it, but we have to have that abundance and be good stewards of everything we have.
Yeah.
You can't have an imbalance.
Number 4, when government creates a problem, high taxation, and then turns around and grants you an exception to the problem they created, any tax qualified plan, aren't you just a little bit suspicious that you're being manipulated? Isn't he? He's so wise.
No more to be said there, right?
Right. Exactly, though. Just take, like Nelson says, though, if you just take a step back and slow down and just look around, you'll know exactly what to do. There's a lot of nonsense and noise out there.
Yeah,
We don't slow down long enough to really think.
And I think that's sometimes on purpose. The community in general wants you to be so busy that you don't question some of the things that go on. Because if you really look back at a 401k, I had a 25-year-old individual, just got out of college as an engineering student, making $85,000, $90,000 a year. He wanted to hop into his 401k and fund it to the max. 25 years old. I said, in 30 years, our tax rate's going to be higher and lower. Well, I don't know. I said, I don't know either. I said, are you going to make more money or less money? He goes, I hope more money. I said, okay. And I just left it at that. And he sat there and he stewed on it, and he's thinking about it. Exactly what Nelson's saying here. He's like, oh my God, I'm going to be in a higher tax bracket because I'm going to be earning much higher than I am now. And the brackets are going to be higher because they're going to have to pay this. He said, I'm going to have more income and higher tax brackets. He said, why would I put money in there? I'm like, it's a great question.
It's almost like the government knows they're going to get a better rate of return on that than the consumer, which is a video we have on our course.
Oh, and where's that course located at?
Factumfinancial.com, Wade. If I have to tell you one more time.
I'm a slow learner, Kyle. Number 5. What is it?
Wealth has got to reside somewhere. Where would you prefer to have it reside? Now, this is where the savings conversation comes into this strategy. Real estate, we love real estate. Great investment. One of the best, in my opinion. But it's not a savings environment. This is not a savings asset. This is an investment. The stock market, same exact thing. These are investments. You don't have all the benefits that whole life insurance has, which is why you have to stick whole life where it needs to be, at the base, at the foundation. Or do you want a free contract with one person's life? From this base of financial operations, you can do any of the other things in life that you desire. So we're not saying don't invest in the stock market or don't invest in real estate, only do whole life. Shift your savings from a commercial bank to where they save inside whole life insurance. Once it's there, then you can use it to go do what you were going to do anyways. Invest in real estate, invest in the stock market, whatever it is, as long as you know and understand the risks there. Yeah. When you have both of those functions, you're way better off just by changing your savings environment.
Yeah. Create an entity that's already there. So it's one extra step. Don't put it in a commercial bank, put it into your financing system, and now you have control and you reap the benefits of that control.
Forever.
Yep, forever. Thank you.
Number 6, you finance everything you buy. You either pay up interest to someone else or you give up interest you could have earned elsewhere. There are no exceptions. So your takeaway from this, because this is in the book multiple times, you have to understand this piece. If you don't take control of the banking function, you are now willingly transferring all of that wealth to the banks. You know this is happening now.
Yep.
So once you have that awareness, you should be a little bit frustrated every time those dollars leave your control.
Yep. I'll say it this way. You have to love yourself and your family more than you love Wells Fargo. Are you willing to treat your family and your money better than you treat Wells Fargo?
Yeah.
And now that you know that, like you said, now it's your obligation. You're going to make this choice. Now it becomes a choice. You're going to, because before maybe you didn't know it, but now that you've heard this, now you're making a conscious choice. Do I love Wells Fargo? Or do I love my family? Who do I love most?
Easy decision.
Should be.
And the last point, your need for finance during your lifetime exceeds your need for life insurance protection. If you solve for your need for finance through life insurance cash values, you will end up with so much life insurance, you can't get it past the underwriters. You will have to insure every person in which you have an insurable interest. This is the cool part of the multi-generational play here, is if you design these policies and treat them like a banking system to finance the things you need to finance in life, when you're ready to graduate, It's not an if, it's a when. You will pass on more insurance to the next generation than what you could have qualified for right now.
Yeah. On an income tax-free basis.
Income tax-free basis.
I mean, how crazy is that? I mean, that's why I think a lot of the people in the insurance world don't get this, because it almost goes against their grain. Is that they would say, well, he says you don't need life insurance. He didn't say you didn't need life insurance. He just said your need for banking and financing is more important today than life insurance. And if you solve for that properly, then the need for life insurance kind of takes care of itself.
What an amazing concept, because at the end of your life, what do you have? You have a huge death benefit, which is probably one of the things you're going to be thinking about most frequently, is your legacy for the next generations at that point in your life, because you did these things up front.
Yep. And then what have you done to teach the next generation? I would challenge anybody. I know we're done here, but I would challenge anybody. You might go down this journey, but don't go down it alone. Invite your family, invite your spouse, invite anybody that you want to find freedom and control, because that's what we're going to be teaching here. And that to me is the real beauty, is if we can bring more value to that next generation, because if they just receive the dollars without the education, typically those dollars are gone pretty quick.
The stewardship has to be there.
Yep, exactly. Well, thank you, Kyle. I appreciated our conversation.
This was awesome. Had a ton of fun.
Thank you.